Morning all. How we doing? All good? So I'm a bit late again this morning. Got COVID in the house. I'm having to do lots of things I don't normally do in the mornings, like kids' lunches and stuff like that. It's all a new experience. How are we doing, Stevie? Yeah, Proster, morning. Right, where are we? So let's have a quick look at the ADRs before we have a look at the indices. News-wise today, kicking off, we haven't got a lot. We've had retail sales this morning, negative for the UK, which I'm quite surprised about, actually. I wasn't expecting it to be that much negative, but it's very negative. We've got IFO climate this morning for the euro, which doesn't do a lot. It's just doesn't do a lot. And then we got consumer sentiment with the University of Michigan this afternoon. That doesn't tend to do anything either. It's a leading indicator, which is used by the analysts to forecast monetary policy change from the Fed. So it's not something that tends to move the market, but it is something the analysts will look at. So, but yeah, nothing particularly exciting. So no news today. So literally today is just pure price action. We had some news from Kuroda overnight. Do not think the markets have lost faith in the yen, basically. So remember I said yesterday in the Telegram group, the BOJ have got to step in at some point soon and do something about this yen weakness that the markets are experiencing at the moment. Looks like they are starting to do something. So watching FX moves carefully, they will look to intervene. Basically, they will put monetary policy in place that will strengthen the yen. It will mean that people will have no choice but to do something, but to buy the yen, basically. So it's not far off, I don't think. I had a feeling this was going to happen. Bank of Japan have had to do this before with the yens. The yens have done this sort of stuff historically, and they step in, they change monetary policy, and all of a sudden it's like, wow, it's attractive to buy the yen, isn't it? And all of a sudden you'll see this start to come down, and it will come down hard. It's just when they do it and if they need to do it, but they obviously are watching it hard, watching it closely, because it's having a massive impact on their finances. So we've got some movement starting again this morning in these. We'll see if we get any continuations, but the yens are starting to roll over this morning across the board. So good signs. The Aussies are also coming down very hard this morning. Obviously, it's only the start, but there's some of these Aussies are breaking lows. So they are also starting to roll over now, which is good. Which is what I was expecting and hoping to happen, was we'd start to see some weakness in these Australasian pairs, which will strengthen the yen. So, yeah, it's good. It's all starting to potentially move. It's early days yet, obviously, but yeah, kind of going in the right directions. Pound's not doing very well this morning off the back of a nice 3-bar reversal retest going in on the pound yen. Look, that's lovely. Attempt to take a little short on that on my second stage account. I'm not monitoring it though, so I'm not going to. So pound negative news this morning on the retail sales. So yeah, not good for the pound again. But obviously the pound odd and the pound New Zealand, which are the two that have been hammered the most, the directional movement on this today will depend on who has the worst moves. So it's the best loser wins kind of scenario today with the pound odd and the pound New Zealand. The Australian and the New Zealand are coming down. The pound is also coming down. So whichever one comes down the hardest, the other one will go up. So if we have a much weaker Australian dollar than a weaker pound today, we'll get some movement on the pound. So it's very difficult to tell which way these are going to go today because they're all decided to collapse at the same time. Who'd have thunk it? Anyway, morning, Adrian, Diamond, Peter, Leo. Right, we got markets room. So let's have a quick look at yesterday's markets while we're waiting for the opening ranges to go. So yesterday was a rubbish, tricky little day. Lost in the end. I was down 0.5%, which is not bad. So I took a break even on the second position. So not great yesterday, but not the end of the world. Actually, no, I was down more than that. I was 0.7 in the end. Sorry. We didn't go anywhere yesterday after the basically the drop and the pump. We just went into an accumulation, so we didn't get anywhere after yesterday. And obviously, this is why we just got this tiny little candle put in. So we're an inside bar. So we've had the bulls take control, and now we're waiting to see what direction we're going to go into. So we need a break of one of these levels on the DAX to decide where we're going next. Nasdaq, strong day. S&P, strong day. Dow, not quite as strong, inside bar. So the US indices just had a pause day and then we've recovered. So complete opposite to obviously what's going on with the DAX at the moment. So lot weaker here. We've still got this gap fill to do. I'm sure we're going to try and do this gap fill. The market's not going away from this gap. And that price action that we had on Wednesday, I think this is just a pullback bar precursor to this drop. So I'm looking for a short today, and assuming that this was the pullback. Remember, we put a fib on this yesterday. And we were looking for that pullback at 38. We didn't want to go any higher than that. We went into a little descending wedge. So I think today we are potentially going short. So I'm going to watch it at the open. And obviously watch what happens excuse me, with the Dow as well. And I've got my eyes on obviously all the other instruments on my other monitor. But we'll see. So I've got my new funded account, not funded, stage 2 funding account with my Forex funds. So I've got 2.5k target on that. But I'm kind of trading that a little bit differently. I'm scalping that really fast. In and out quick on those. And we've got 2 minutes on this candle. I've got my timer back so we can see what the hell's going on now. So on the DAX, remember we were looking for that 14,000 dead level down here as our target. God, got it right. Look at that. Spot on. Wow. I think that's the first time I've ever dragged a line and actually got it on a round number. Never does that. What's the odds of that? Got doji forming at the moment on the Dow. All the other indices, Nasdaq's coming down, S&P is coming down in the open. Got a little pullback on the Aussies and the New Zealands at the minute. And a little pullback on the US dollar. US dollar went off fast this morning as well. We had a big strong push on the US dollar, which is just pulling back at the moment. We double topped on that. Nasdaq's coming down very hard. Attempts to take a little short. Going short one there. So there's our opening range. We've closed bearish. Nasdaq's coming down pretty hard. All open bearish. Morning, Andy. Morning, Franco. Why is my chart so different to yours? Different broker, I'm assuming. Make sure your candle closes are on the same time as well. Some brokers have weird candle closes. You want to go with the New York close broker, ideally. GMT +2. So whatever your candlesticks are should be GMT +2. So it's 8:05 in the UK now. We're on the 10:05 candle. This is what everybody uses in New York. All brokers basically all use UTC +2. You might have one of those weird brokers that just I've had brokers where they close an hourly candle on the half hour and stuff like that. It's just, of course, your price action is going to look completely different. And obviously, if you've got pre-market data, it's going to look different to if you haven't got pre-market data. So this is the close. This was last night. This is 7 a.m. this morning. Yeah, so I don't have any pre-market data because the market's closed. So I'm not interested in what the broker thinks happened overnight. I'm interested in what's actually happened at the exchange. NAS is coming down very hard. FTSE... the Dow just attempted to make a new low. Okay, adding one more down here. So watching this area, we've just broken the Dows, just broken the lows. So got very good momentum across all indices to the downside this morning. S&P's fallen off a cliff. All broken lows, so we're all coming down to accumulation points at the minute. So potentially we're going to get a pullback, drop. DAX, we haven't made the new lows as of yet. Might have been a little early on that second entry, but Diamond, you were saying you've been watching me in here trading like this and you still don't understand how I do it. There's not really an easy way to describe it. It's discretionary trading. So I'm looking at price action and I'm looking at levels and I'm looking at biases. So the first thing I do, as you see every day, is I look at the chart on the daily and I have a look at where I think we're going today. So I'm thinking at the moment, still thinking gap to be filled, massive bearish engulfing and an inside bar. So this is a bearish price action pattern, bearish engulfing, on its way to fill out a gap. Didn't get to the gap yesterday. We had a little bit of a pullback, which is likely just a profit take move for people to add into positions short. So my bias is short. So I have a look at what happens at the open. It pushed up really hard into these highs, rejected them, and closed bearish. So I entered short. It's completely discretionary. I'm guessing, basically. There's no solid system or strategy at play here. I am guessing. If it looks like it's going in my favour, I'll add into my position in the hope that it continues in my favour, which means I win twice as big. If it goes against me, I close the position out. It's literally that simple. There's no rocket science behind it. I have no idea where this is going. Not a clue. It could scream off to the upside now and go 15% up today. I've not a clue. But what I can do is see what's going on the chart. And if it's pulling back and I don't like the look of it, I can shut it. And if I like the look of it, I can add to it. That's all I'm doing. It really is there's no magic going on. It's completely discretionary luck. 50% of trading is luck. If you hit the button buy or sell, you've got a 50% chance of it going in your direction. If it goes in your direction, how you manage that trade is how you make your money. At the moment, I'm 0.8 up. Do I want to make 0.8 today? Do I want to make 2%? Where do I think it's going? Don't know. I've got conviction that we're going down to fill that gap, but we're not going to get there in one candle. So I need to see what happens with price action. It's just literally price action. If the market's pulling back after pushing down, you see me putting the fibs on every day. I'm looking for what normally happens in a pullback. We get to a 38 or a 50. It's the same as all time frames, all trading. The market moves in cycles and market structure. Market structure at the moment, I'm assuming is going to continue bearish. Until it proves me wrong, I'm going to keep adding shorts. That's really it. There's no clever maths or science going on here. I'm thinking short or long, as everyone else is. You're a bull or a bear. Every time you take a trade, you're a bull or a bear. That's literally all you are. And whether or not the bulls or the bears are going to win out, don't know. It's just trying to time when the bulls and the bears are going to take control of the market, and that's when you need to try and get in. But if you want to make 1% a day, pretty much done it. Shut it, walk away. And that's one of the other keys to this, and that's why I've just passed that evaluation. I've been setting myself a daily target, and I've shut it, and I don't trade it. If basically I've hit the target. Over trading. I overtraded on day one. But like you keep saying, there's a lot of luck involved in scalping. I had a really lucky day on day one. I basically hit the sell button on 3 indices. It moved my way quite sharply. I hit the sell button again, and it pushed really hard. And I banked 4.5% on one trade. But that you take it. It's controlling the risk is keeping this bit controlled when you're scalping is the most important thing. If this is going to run, let it run. If it gets down to there's 1% in the bank. I don't know where it's going though. I was kind of kidding. I see the technicals of what you do. I mean more how you have the nerve to click the button. That's basically like I say in the course, yeah? Click the button. You just click it. You don't need a nerve. The hardest part of trading, right, is deciding on when to hit these buttons. When you've hit the button, it's like I'm in. Now I'm going to watch what happens. If you and I've done this in the live room. When I first started doing the live rooms years and years ago, I put challenges in the Telegram group. I said to people, pick an instrument, pick a time frame, and pick a direction. And I got 3 different people to pick those 3 different things. And then I basically opened up the chart and I pressed the button. So someone would say, go US dollar CAD on the hourly chart long. And I'd open it up and I'd hit the buy button. And then by the end of the day, I'd show them the profit I'd made. When you hit the button, to a certain extent, is fairly irrelevant. We know that. We can't time the market. We just know that it's going to go up and down. So if I hit the button short now, and this thing pushes up, I can add in a new position, waiting for that move to come down, and then take a profit on it. It's just, the hardest part is hitting the button, but actually that should be the easiest part. It's managing the trade, which is the hard part. What do I do now? 0.8. I see this is stopped. I'm closing it. I'm taking 0.8. If this collapses now, folks, so what? I've made 0.8. Take it when the market gives it to you. Now it's going to collapse down even further. I'm just shutting one out on my other platform because I've got 2 trades running on my funded account as well. Okay, I just banked $250 on that funded account. That's 10% of my target just hit in one trade. Lovely. Just realised I haven't got a stop on that second part, which I need to put on. I have my finger over the button, but too often hesitate until it's too late, and then I don't feel like I can get it. Problem is my psychology. Is the trade size. Yeah, so scalping obviously is a much more difficult time frame to take. So that's one of the reasons I built this, is to take that out of it, right? So if you've got a short bias now, hit that button. Done. You're not in the market. What you're doing is you're saying, I think it's going short, but you're not in the market. Let the market take you in. Right? If this thing goes down now, short, I'll get into the market. Until the bears show me that I'm right and they're in control, I'm not in. Yeah, and if this now pushes up like that, I'll keep hitting that button or that button, depending on where I want to put my order, and I will go up with the market because my theory is that's going to happen. So I want to get in when it goes down. I don't want to get in while it's going up. That's the better way to get in. And you're going to get a much tighter entry. But would you rather have a tighter entry, or would you rather have a trade that works? You know, it's just stops and limit orders are much better to use in scalping, I think, personally. So it just got me into that trade. Now I'm in it. So now I'm going to monitor it, worry about it. But all the time you're entering sell stops under the market and the market's moving against you, you're doing nothing but get a better entry. You often go down 1 or 2% on a day, and then you need 2 to 4% to end the day positive. Yeah. Since I don't have confidence to get in at 0.5%, that's 2 to 4 seems really out of reach. Yeah. It's about chipping away. You know, this, right, so here, yeah, let's say, for example, I got this all wrong yesterday and I went down 1% or whatever. I don't know when this, no, this is not yesterday. Yes, it was yesterday. And I hit the button there. Remember, I got in here and I got out there because I was like, oh crap. And then I got in again here and here. Was it yesterday or was this another day? I can't remember. But if I was down 1.5% and I got in here and I rode the gap fill, which is what I did to you yesterday, yeah? And I made 1.8% or something on the gap fill. That's, if I was 2% down, I'm now back to break even. Like I said yesterday I didn't have a great day. If I can just keep the process, I know that I can make 1-2% very easily. I just made 0.8% there. Yeah. So if I'm down 1.6% on the day, my brain is thinking, I've only got to get a couple of trades and I'm back to break even. If I have a lucky one, i.e. it tanks down to this bottom here and doesn't stop or give me a green candle all the way down to there, fantastic. Your day, your week, your month is made on a few trades. You're going to get loads and loads of tiny little choppy little rubbish. You're going to get stopped out. You're going to go to break even. You're going to get 0.2 losses. You're going to get 0.3 losses. You're going to have ones that will scream back up and stop you out for 0.5%. You're also going to have them scream down in the opposite direction in your favour. You just got to wait for them. You don't know when they're going to happen, but they're going to happen. Yeah. You just can't time it. You're going to catch these. And when I do, and you see me very often, when it's screaming down like that, what am I doing? I'm hitting this button, modify TP, and I'm pushing my TP further away. Because if this thing's just going to collapse, I'm going to let it collapse with me. And I'm dragging my stop loss with me. It's just a numbers game. But you need to set, I think the most important thing personally for me is to set this. What do you want to make a day? If you're on an evaluation and you've got a target of 8%, yeah, that's rubbish. And you want to hit, you want to hit that evaluation in 10 days, you've got to make 8% a day, 0.8% a day. Yeah, if you hit 0.8%, walk away, done. Or if it's at 8.8%, lock it in, take half of it off, and lock it in, lock the rest in. There's no real answer. It's discretion. It's all discretionary trading like this. How much you lost in your begging? What? In my begging? What does that mean? Not quite sure what you mean by that. In which time frame do you use the fib? Use the fib in the time frame you're looking at. Yeah, Fibonacci works in everything, all time frames. Yeah, Fibonacci ratios are on movement. Yeah, so you put it. If I'm looking at this now. Yeah, where am I expecting this to pull back to? Don't know, but somewhere around there. If market structure is going to continue short, that is what I would expect. What I'm also looking at is yesterday's move in Hull. So that's a daily fib, isn't it? So that's a previous day's daily fib. And I was looking for a pullback to the 38 yesterday to short that gap fill. Fib, it doesn't matter what you... People get really consumed by time frames. Don't forget, market doesn't have a time frame, yeah? You're looking at price moving up and down, yeah? The period of time you choose to analyze that price movement is what you choose. But market does not look at time frames. There's nobody in a professional institution looking at a 5 minute, 10 minute, whatever minute chart. They are looking at time and price. They're not looking at a time frame. They're looking at buy it up to 14,350. When we get to 14,350, sell it. Yeah. They don't care whether it takes a day, a week, a month, or a year to get there. They've got a target to sell at 14,350. Time has nothing to do with the people that move the market. Their job is to enter at X, exit at Y. Move it from X, move it to Y, depending on what they're trading. They don't care what you're looking at. If they need to spike it up there because they need to dump a load of orders, they'll do it. They've got no idea it's made a spike and a massive shooting star on the M5 chart because they're not looking at it. They don't care. They just need you to dump 250k of orders up there. Yeah, doesn't matter. But the market moves algorithmically, and this is why we get price action and why we get moves like this, because they are dumping orders, profit taking, dumping orders, profit taking, dumping orders, profit taking. That's what they're doing. That's why we get that movement. And you said to me this morning, Profster, didn't you, in Telegram? You took a trade on gold yesterday, absolutely flew, moved to break even, took out your break even stop, and then flew in your direction and would have made an absolute fortune. It's because we know that. We know it does that. And this is what I keep saying about moving break even. If you move to break even, you'll get break even. Because that's how the market moves. And Fib will tell you roughly where it's going. So if you move a break even, where am I in? I'm all the way down here. But if my entry was here, for example, and I move my stop to break even here, I've got a very, very high probability of being taken out by a pullback in the direction that I'm looking to trade. So the logical thing to do would be, if you've got a stop up here and you want to reduce your risk, is to put your stop down here somewhere. So use Fib to identify where potentially we're going to pull back to. This is taking too long, this trade. I didn't really want to get into it down here anyway. I'm scratching this. It's just taking too long. It's not moving. So I want to be out. I'm going to wait for the next pullback. We'll have a look at the FX pairs in a sec. So we just pulled back basically into this little gap here. We've got some buying. So looking for sells up here somewhere. Lee talks about it, and it's true. Pain tolerance is part of the game. Yeah, pain tolerance. Doesn't matter what time frame you're trading with, your position trading, you're trading with a stop, your swing trading, whatever you're doing. This job is about pain. There's a lot of it. You're going to get stopped out lots. Oh, how much I lost in your beginning? Oh, God knows. No idea. 20, 30, don't know. Lost lots. I've blown loads of accounts. I've been trading 13 years. I've done the same as everybody else. I've blown loads and loads and loads of accounts. Everybody does. I stopped trading for years. I went from stocks to FX, back to stocks, gave up for 2 or 3 years, came back to FX, went back to stocks and indices, tried options, came back to FX, done loads. But yeah, I've blown loads of accounts. Everybody does. It's part of the journey. If you can't blow an account, you're not taking risk. If you're not taking risk, you're not trading. And nobody knows how to manage risk when they start trading. What they concentrate on is this indicator put an arrow on the chart, so I need to go short. And I'm going to use a risk reward of 7-1, where the market was only actually ever going to give me 2-1 because there's a massive support there, but I don't know what support and resistance is at the moment, so I'll just get stopped out. That makes me cross, so I'll double my lot size on the next trade and get all this money back. And I'll go long because the arrow told me to go long, which immediately stops out. That's what we do, isn't it? We follow arrows when we start. And then we learn that arrows don't mean anything. But yeah, I lost lots. And I've spent lots. I said in the Boocamp, I don't know how much money I've spent on courses as well. Done them all. Spent a lot of money. But again, I liken it to any education. If I want to become a brain surgeon or a pilot, it's going to cost me 30, 50, 100k for my education. If I want to become a lawyer, solicitor, whatever you do in life, in whatever job you want to do, you've got to spend thousands and thousands and thousands of pounds training to become that person. This is the same, except in this industry, you have to take lots of courses to find out which course sticks in your brain, and you have to spend lots of money figuring out how not to do it. And then what happens is, the way that works with me, which I think is the way it works with most traders, is you get an account, you blow it. You get another account, you make a bit of money, you blow it. You get another account, you think, I'm not going to do that again. You make a bit of money, you go into drawdown. You come back to break even, you make a bit of money, you go into drawdown, you blow it. And you go, wow, did way better than the last two. And then you look at the next account and you go, right, I'm going to trade this one differently. And what happens is you sit there 3 or 4 months later and you go, I ain't lost any money. I'm a break-even trader. A light bulb has gone on. And then you blow it. And you start again and go, right, what did I do wrong with this one? And why did these all work? Why did these all fail? If I can get rid of these and be left with those, I'll do that. And then all of a sudden something clicks and you go like that. And it's like a plane taking off with not much power. And then you suddenly realise, actually, yeah, I can't control these. I just need to make sure these are bigger than these. And then that's it. You've made it. That's the life of a trader. But you're going to have to blow 3 or 4 accounts before you understand that is going to happen. Unfortunately. I'm much more tolerant with pain than I used to be. When I started with position trading, I was uncomfortable with 2 to 5% drawdown. Now I've lived and succeeded in recovering from a 10% drawdown. Yeah, this is speaking of drawdown. Pound odd is holding up at the moment, quite nicely actually. So that was the news. Looks like we're recovering. What are the yen's doing? The yen's are coming down very nicely, very nicely. Okay, so all these yens, we'll have a look at all the FX pairs in a minute. We need to get this accumulation broken on all these yens. We need to get some pullback leg in. Oh, quick. Go short one. Got a very big wide stop on this one above the opening range high, just in case we're going to pull back up into this area. But I've got a feeling today might be quite a strong trend today. So I'm looking for 2-bar, 3-bar pullbacks really today. We've just tapped into this area, which we broke the lows of that accumulation and rejected. So sellers have stepped in, pushed down again. So I'm just entering another short there. Quite a wide stop though. Diamond, but I'm in 15% drawdown now on GA, which is like starting each trading day in pain. Yeah, this is it. The pain. You've got to get in hard and fast on these ones at the minute. These ones that have run away because of the war. You've either got to take the loss or you've got to get in super aggressive on them, and they are. One of these is going to catch, and it's going to get there, and it's going to go like that. That one that you get, that is the one that's going to get you out, and you've got to get it. You've got to take it. Unfortunately, it's very, very, very hard to do. I know. Let's look at GA while we're on it. So this level here, we haven't even got down to this second level. These are the two levels, the two further levels from the daily. This could be it. Remember, we were talking about this being the stop hunt level. Sorry, this was the initial stop hunt level, wasn't it? There, which we broke down through. So the stop hunt is typically half an ADR to an ADR up to 155, and it was that point there. So we've moved now 200. So we've moved just beyond what I would class as to be a deep stop hunt on 4 hour. But we are holding down here at the moment. We've triple bottomed. It's more of a double bottom. So it is holding. If we can break back above here and this accumulation from yesterday, that is starting an up leg. So we've at least got that as a target, haven't we? So it's starting to work. I was doing great in Forex, getting my profit goals day after day, month after month. Then the war, my mojo was broken, and now blur. Yeah, it's war. It's something you can't control, unfortunately, and it's just a case of if you're in. What I often do is take partials, and you saw me do it before. When the war kicked in and I took all that loss on the account, I started scaling out of the positions. So taking small losses, and then I saw it move further, and that's when I decided to get rid of it. So the first step is to remove, if you've got that many positions on, remove maybe 50% of that one, 50% of that one, 25% of that one, 25% of that one, and reduce the pain. Yes, it's going to look horrible over on your P&L, but your pain will be reduced. Also, it's going to have the effect of bringing your average from there down to there, which means that that aggressive position is much easier to get you out. And yes, you take a loss, but the hard thing is obviously if you start position trading at a point like this, yes, it all looks terrible. If you've had 6 months where you've built up a bank of X £1,000, yeah, all you're doing is you're not making money. And if you can break even when a war starts, that's a really good job. Because there's nothing you can do. You can't control this situation that we're in at the moment. No one was anticipating the invasion. And when the invasion started, no one was anticipating the effect it was going to have on some of these markets. So if you can get out with a partial loss, that's not actually a bad result. And this doesn't happen. This sort of movement that we've seen, like I said, on the RSIs, not happened in years and years and years. The 90-10s just don't get hit. We've hit them twice, so it just shows you this is completely unprecedented. Didn't get 90-20s hit, I don't think, during COVID. Might have done. I don't remember. Just nuts. We're just pulling back at the moment. So I'm looking for this level to hold somewhere around here, ideally. 50% retracement on that move. We'll have a look at the FX pairs in a sec. Stevie, my last account I blew 25,000 euros over leverage with lot size too big. Blown quite a few until you learn it's really all about the risk. Market does what the market does. Yeah, exactly. And that's what I keep saying. I teach in the course. You can't control the market. The market moves the way the market moves. Market goes up and down through time. That's it. That's all we know. We don't know which way. We don't know why. We can guess and we can have things that influence our decision making. But at the end of the day, when you press that button, what happens after that button press is the most important thing. And keeping your risk small. Yeah, position trading, we're taking tiny, tiny, tiny risks. When we hit that button, I don't care if it goes up by 2 ADR. Couldn't give a monkeys, because I'm taking a tiny little position. What I'm looking to do is be right and allow the market to let me be right. So if I get in long here and it does that, that's no problem. I'll get in long again because it's going to do that. And when it does that, I get out. But the risk I take here is not 1% or 2% of my account like you would with a stop loss, like I'm doing here. It's a different thing. But risk is the most important thing. And that's your job, is risk management. That's why they're risk managers, That's what they call you. Professional traders in banks and institutions are called risk managers because they manage the risk. It's their job. Nick Leeson was a risk manager. He just wasn't very good at it. Gold and M5. Is it a bearish pullback? Let's have a quick look. We'll do the FX pairs. This is we're stalling out on a pullback here at the minute, so nothing. We're not missing anything at the minute. M5. Yeah, I mean gold. I would be inclined to be long on gold at the moment. It's nice and orderly at the minute. Yeah, I mean if you want a lesson in support and resistance. See, that's actually a market structure break, but it's also a flag. Don't know. This is a prime example. Technical analysis. You give this chart to 10 people and ask them if it's a long or a short. You will get half say long, half say short, because some people will be viewing that as a bear flag, a bull flag. Other people, like me, will be looking at that thinking that's a market structure break. And we're now in bearish market structure. Flip out to the hourly, you're long. Flip out to the daily, you have another view. Yeah. So on M5, yes, it's a pullback, but I don't know if it's a long or a short. I would say long, but that's because of my higher time frame bias and the fact we've got a war on and people are buying gold. Fundamentals, don't forget fundamentals. Yeah, I'm fundamentally short on the DAX at the moment because we're in a bear market on the indices, on the stock markets, and we've got a gap to fill. So I'm looking for shorts. That's a lovely 3-bar reversal long, but I'm not taking it because I'm short. Bias. So what's your bias on gold? That's really your answer, isn't it? Right, so we've gone through the chat. Let's have a quick look at where we are with with everything today so far. So CAD yen ADR hit to the downside. So the ADR hit on the CAD is low because we've had a big drop in the Asian session. We've just had a lovely pullback to what? I keep drawing it every day. Hopefully it sinks in at some point. I'm sure it has. So we just had a nice fib pullback, next leg down. So CAD yen would not be looking for longs off of that ordinarily. I wouldn't have been awake anyway. So, but yeah, I mean, obviously we're bearish at the minute on the CAD yen. US dollar yen, same thing. We've hit to the downside, 125 ADR, bounced nicely off of 125 ADR. So this just shows you how you can use this ADR indicator as well. You can take every single hit to ADR that you think that looks like it's bouncing, but you have to decide, am I playing a reversal or am I playing a pullback? And that's going to be based on your higher time frame bias. Yeah. We're looking for shorts on this thing, but this thing's just bounced straight into an accumulation again, but it's now rolling over. So lovely looking shorts. This is looking really good for the yen. Finally, Kuroda's done it. I think that what he said in the Asian session, whatever that was, I haven't actually read it. Do not think the markets have lost faith in the yen. Yeah. Basically, he's just being bullish. A weaker yen is still beneficial to Japan's economy. That's come from Financial Juice. So yeah, I think he's basically G'd the market up this morning. How long this will be is difficult to say. We've moved such a long way on this. Again, if you want a clue, I'd be looking at least 95,360 level. That's where I'd be looking to get some kind of reaction. More likely that because there's a top there, there's not really any support resistance anywhere around the area. We've got a little accumulation there potentially. And don't forget, it doesn't have to bounce here. This is roughly we get somewhere around there. Somewhere around there. Yeah, it can go down to there, it can go wherever it wants, but it's roughly somewhere in this zone is where we tend to get a bounce. We don't have to be exact. You're not going to get it bouncing off that to the pip. Somewhere around there, though, I would start to take profits on these downward moves. And if you've got aggressive positions on, somewhere down here is where I would look to try and get your break even. So yeah, nice one on the CAD yen, obviously, but looking for bearish, and US dollar yen. Professor, check the Fibo M5 Fibo on gold. Yeah. So yeah, next leg up could be there, but could also come down and do something here. That is where I would be looking for a decent bounce. We have already bounced there. But yeah, somewhere there. If that doesn't hold, that will. So if you're going to get into a long position here, go long now, assuming that you're right. Put your stop down here. Take a second position down there to average into that. And then hopefully that will hold. But the stop on that position goes there as well. take 2 positions. If they're both wrong, get out because you're wrong. US dollar yen coming down nicely. 2 riding that down, hoping for 50 pips. Yep. Yep, we're all coming down very nicely at the minute. That was a lovely 3-bar reversal. Somebody said to me in the group, so I'm wandering around this morning, talking about all sorts of stuff. So seeing where that pullback's going. We're back up to the 20 now. I'm just going to get a second position on this if we get a bounce off of here. Somebody was saying to me in Telegram, I can't remember who it was, but they've got the price action toolkit and they wanted to know if it can be used in conjunction with the market reversal alert indicator. And my answer was, as is always, price action will always come before market structure. Price action is showing you potential turning points in the market. Yeah, so price action up here, this 3-bar reversal, this shooting star, this bearish engulfing, comes before the market structure break. So your price action will tell you earlier than the market reversal alert indicator when a turn is potentially happening. But obviously a lot of price action will fail, which is why you have tiny little stops on price action typically. So you can use it in conjunction with the reversal alert indicator, but you'll mostly find that when you get that alert, it's price action. It's a bearish engulfing and a strong closed candle following a shooting star. So good entry, but the reversal alert gives you the confirmation of the entry, and it's also breaking lows. So you can use it in conjunction, but I literally just saw that 3-bar reversal there, and I was like, just reminded me of it, so I thought I'd say. Anyway, still pushing up a little bit. We've got 2.5 minutes left on this candle. I'm just going to cancel that one off and put a sell stop under this low as we're pushing up higher. Just spaces out my entries a little bit better. Right, so H4 RSIs. Very similar still, obviously, on these. Aussie dollar CAD. So this has stalled very nicely up at the highs here. We had this lovely double top, which we've basically got into an accumulation at. We're due a pullback on this one. We've got a sort of last stand really up there on the Aussie CAD. There's no news on the Aussie or the CAD today, so just waiting really for some price action. It's not quite as extended as it was. We were above the 75 on this, so we were up here, and obviously we've started that move down. So we just got reversal alert this morning in the Asian session. So looking good. All of these Aussies have obviously been off the charts. Aussie yen as well, obviously, as you can see, Aussie New Zealand and Aussie US all screaming away the Australasian pairs. Nice pauses in most of these as well. So this is really where you want to be concentrating if you're shorting, taking your profits somewhere around there. Obviously I normally go for around about half an ADR in a basket, but you could get more out of these at the moment, I think, because they've moved so far. But it's quite difficult to hold them, obviously, because faith in the market at the moment is hard because we're seeing it moving so fast and so hard in one direction. But all of those nicely extended, all coming down this morning. So you would have been in these already anyway, based on obviously the strength of the movement that we've had. But yeah, good movement starting. CAD yen, same thing, lovely reversal starting on that one. Looking at this level, somewhere around here. It's a bit difficult to tell. So I would pick that high of that candle here. So this is the pullback. This block of orders here is the pullback before we got that break. So that is where I'd be worried about a bounce. But if we can break that, i.e. get a reversal alert, market structure break, obviously, that is exactly where I would want a pullback and drop. And then from there, there is potential just to reverse this whole thing, because this thing just didn't stop. We had 3 down candles on the way, the whole thing. If somebody got long on this, it would have been very difficult to get out. You probably would have thought, oh, maybe I'll get out there. If you trailed your stops, I mean, these kind of trends are once in a lifetime. You don't see this sort of trend very often at all. So I would anticipate, if we can get some yen strength, it being that sort of move. We've had a very, very, very gradual grind, and quite often we get a very, very sharp reversal, which will take out an entire week's price action in a couple of days. So hopefully, fingers crossed, that is the start of that kicking in now on these yens. But we've seen it starting before. Euro odd is starting to roll over. We're starting to show a rounding bottom. I can't long the euro. I still just can't long the euro. So I'd be looking for pullbacks to short it. It's very difficult because it's not getting out of embedded on the stochastics on the RSI. Someone was talking to me about stochastics this morning as well. And I was trying to explain how many false signals they'll get. That's what I'd be looking for, some kind of pullback. We've got a gap there on H4. I think that's a little bit too close, really. I think it needs a little bit more of a pullback on that, but this is going to be based really on the Australian dollar. It's all to do with how weak the Australian dollar will get and how long that will last, as to how far that is going to push back up again. But a lot of this stuff is just completely overripe. Euro Swiss, I'm still short on this. I've been short on this for a while and I'm holding it. The Euro Swiss obviously is in a massive downtrend. It's a bit of a unique pair and a bit of a unique situation. The euro obviously has been affected by the war. The Swiss franc has been affected in the fact that the Swiss banking system has declined, as has the pound, which is why we've been hit with the pound, because obviously over 50% of the transactions in Forex go through London, and we've just turned off one of the major systems that Russia uses to transact. So the Swissie's been affected in that way as well. So these are both weak currencies. The Swissie, when it powers up, is just giving it those little legs, and we're just getting that sort of thing happening. So I can't really see this pushing up. So I'm holding it short at the moment. If we can get a break of this low, I think we're probably coming back down to retest. So I'm holding it to see what happens today, and make a decision from there. But I wouldn't really be interested in longing it. It probably will get a bounce, but it will also quite possibly do what it did before and just grind to the downside. So not a really good long opportunity, Euro Swiss. Euro yen, we know about. Obviously, it's a yen. Probably one of the best and one of the fastest droppers when it does drop. Euro New Zealand, again, wouldn't want to be. It's the same as the euro odd. Wouldn't want to be longing it. Pound odd, obviously, we know about. We've been looking at this one. Pound odd. Now, the pound New Zealand has turned off. So that's had more strength of movement. Pound odd, we've got a doji going at the moment. So there's complete indecision in the market still. We're down in this zone where we are expecting to get some kind of movement. So we're embedded, we're putting a nice little W in. It's all looking like it's potentially starting, but again, this is going to be based really off of the Australian dollar and how much movement we get off of the Aussie. I'm just watching the indices pulling back. As usual, I've chosen the one that's pulling back the hardest. All the other US indices are gradually pulling back, and obviously the DAX is having a real good time. It just got up to the 50. Yeah, I haven't got into that. Let me just check my order on that. Oops. Just cancel that one off. Bring another sell stop up. Whoa. Okay, so we're just tapping into the opening range highs now. We've reversed the entire move of the morning. So potentially we're forming a triangle here, which is obviously a bearish triangle. But it's putting back pretty hard. We're doing 100% reversal by the looks of things, unfortunately. So we'll see if we get that high taken out. I kind of want to move that above that. I'm going to add a little bit more risk onto this. Just 0.1% really. Just playing the double top bounce basically. If that happens, I don't want to get taken out and then get the double top bounce, and it's worth 0.1% extra. Just keep an eye on that one. So yeah, so we're in a good spot, but obviously we've got a weak pound. We've just had weak news on the pound, and obviously we're anticipating Australian dollar continuation weakness. So it's in a good spot. It's showing signs of strength, but obviously we need confirmation. We need to get that reversal alert. We need an hourly reversal alert. We need just some confirmation price action long, basically, on this one. New Zealand dollar yen starting to drop. So all the New Zealands, as you can see, are all coming down very, very nicely this morning. All the Aussies coming down nicely. So we've got real good movement starting on all of these pairs at the minute. New Zealand dollar, US dollar as well, starting to come down very nicely. Looking for some power on the US dollar. We haven't had any for a while. So if we can get this New Zealand dollar weakening and going neutral at the time that we get the US dollar strength coming in, we should see a really good drop. Just watch out for obviously levels of support and resistance on the way down on those. And US dollar CAD starting to push, and US dollar Swiss. So we got a little bit of strength coming through on these as well. These are longs. I like the US dollar long. It's just at the moment we're not getting it. So we're still waiting for some decent strength to come through on the US dollar. If you look at the Dixie, this is upside down, obviously. I need to download an Axie account, so I've got the Dixie. I wonder if I've got it on my Forex funds. Do they give you the Dixie? CFDs. No. So yeah, basically US dollar, Euro US dollar is the Dixie upside down. So you can see obviously weakness, little bit of strength. So it's just not moving far. We're in this accumulation, which we've been stuck in for weeks now with the US dollar. It really can't decide which way it wants to go. Obviously, with the Euro US dollar, we would be looking for downward movement there, which is obviously positive US dollar movement. So still looking for that strength to come through. We're just not getting it. We've got no news at the moment. I suspect we're probably waiting for non-farm payroll next week, which is next Friday, for them to start moving the US dollar. But at the moment, obviously with the war going on and the inevitability at any moment of the US getting involved with NATO in the conflict, I think the market is just at the moment just sitting in a holding pattern. As you can see, it's not sure where to go, and at any moment it needs to adjust. So we will see. So there's your 4 hours. Hourly's flat. We haven't got any, which is good because it was when it was extended. Obviously, this means everything's playing out. So the night is always when you're watching these dashboards, when you're getting into positions and you see the hourlies all extended and then disappear, it means the trades are going your direction. So it's nice to have a flat one for a change. It's been lit up a while, hasn't it? All of these have. Right, so let's go back to where we are a moment. Okay, so we've got indecision at the highs, so a nice bearish, nice neutral candle going in. That's a hell of a pullback, isn't it? So it's a 61-hit retracement on the morning's move. So looking to get into second position there. I don't normally add to shorts. But the way this has come down this morning, and the fact that we still haven't done that gap fill, and the fact that we're coming off of a really big down day accumulation, I'm just looking for a second leg today. So that's why I'm adding into a second one here. But if I'm wrong, which I am, what was that? What was that? Oh, wow. Well done. That was the Giant IFO business climate report. Okay, so just been taken out of that. Back to point 3. Okay, well that's cleared the decks to the upside, so looking to get in short. So yeah, looking for short position when they've decided actually no, that's a load of rubbish. Look at that double top. Right, let me just catch up on the notes. Profit, I'm sure, entered on the wick. Yep, that was the gold. My broker's experiencing some technical issues. Can't trade right now. Who are you with, Bruno? Years ago, I was paid to pick up Fed Reserve report every Wednesday. I could call Germany in Geneva before I hit the elevator. They got news 5 minutes before it went on the wire. Franco, that's insider trading. Go to prison. DAX seems to be stalling. Yeah, it was stalling. It's not anymore. In trouble with the NAS. Bought the downtrend. Thought the downtrend will continue. Sold at 14,700. On the NAS. I don't think you'll be in trouble now. You're all right now. If you didn't get stopped out, you're all right. So I just seen. I didn't get stopped out on my other position, which was nice. My stop on my other position on my Forex funds account was at 369. Was there up there? Basically, my stop was above that high here, so my stop was there. I'm glad I put it there and not there. Meanwhile, GA collapsing again. The leeches are feeding on me too. GA, yeah. Double bottom. We're only in a range at the moment. Yeah. We're in an accumulation. We're still in London, still in New York's accumulation. Yeah. So remember what the banks do. Asia opens up, accumulates, passes over to London. London then will either accumulate or move it, depending on which way they need to move it. Who passes over to New York, who will then move whatever they need to move, who passes back to Asia. Yeah. At the moment, what we've got is New York passing to Asia, passing to London, all accumulating. Yeah. So there's no directional bias. They're building a position here. And at some point, either in London or in New York, they're going to scream off in one direction. It's a 3-session accumulation. That's a big one. Look at here. That was not really an accumulation, but they accumulated towards the end of New York, accumulated in Asia, accumulated in London, screamed down. So think also wick off. So we've got the push down, the push up. So that's actually, we've just broken the highs, haven't we? So that's your high, higher low, accumulation, spring, accumulation, push. So if we do get a move down here, which comes straight back up again, that'll be your spring. Your spring will take you up to an accumulation, normally at that high, but they've made a new one. So you would expect to get a symmetrical triangle form at that high, which is basically accumulating everybody's orders that's gone short, simulating like the Borg. So I'm watching Star Trek Picard at the moment, so there's going to be a few Borg references coming out. And it goes long. So we'll see. Either that, or we're just going to triple bottom, quadruple bottom nearly in this case, and fly. Or it's going to come down. Don't know, obviously. No idea. But we are still accumulating, yeah? Until we've broken this low and we're staying below this low, this is an accumulation and potentially a wick off spring. So you might be okay. But it's a tough one, the pound and the Aussie, because it's just the perfect storm, as I said in a minute. It's a horrible pair. Hit my stops for 1.2% loss. Oh, I didn't read that bit. Where were your stops? Stops should be below the lows, really. If you've been stopped out there, you've been stopped out a bit prematurely. Active trades, but it's fixed now. Active trades, Bruno. Not heard of them. Online broker since 2001. Never heard of them. Where are they? Bahamas. And London. Not heard of that one. But yeah, if they're good, that's good. Look pretty good. So I'm just looking at them. No, on the DAX with that spike. Oh, right. Oh, okay. Fine, yeah. Yeah, that was a nasty move. Hopefully they're just clearing the decks short. Still in the GA trade. Keep thinking that the second I close for a loss, it will move and then turn around. Yeah. That is what normally happens. Just got to hold on to that, I think. The thing, like I just said to you, the danger with this is that we think from a market maker's perspective. They'll be sitting on the market maker desk now, looking at the accumulation and looking at their book with a direction. There will be a lot of liquidity here. And this is what the wick off spring is. Yeah, is the final liquidity grab before the move. So if the spring is to the downside, and then you break up and get a W form, that is the entry after the spring. So you need to bear that in mind, that they may well come down and take this out. Depending on obviously the size of the position, you want to just give it some room. Springs are there's no measurement. It's just a liquidity run. It's how far they need to run it before they stop having stop orders, i.e. and then the buying starts and we're off. So just be careful with stops, because this looks textbook wick off. It's textbook. The higher low, it's the drop, the high, the higher low put in, so to encourage the longs. Yeah, not making a new high there. It just broke it there. So it's near as damn it, isn't it, where it dropped. And then the spring accumulation push. So it's textbook. But it's also potentially an accumulation drop. You know, nobody knows, do they? This is the thing. Nobody knows. You just have to play the game as you see it unfolding. I'm just going to put a sell stop in the market. I'm just dragging it down a little. I want to get in below this wick, not below where we are. So the symmetrical triangle's holding. That wick's roughly it. So at some point we ain't going to be able to stay in this triangle, and we're going to break it. And based on that move, you would expect it to be a bearish triangle. But we'll see. Doesn't seem to be going anywhere at the moment. The website crashed. Very good first impressions. Cool. Oh, right. You're being sarcastic. The website crashed. I asked you about them once and I took a look, did I? Oh, right. Okay. So many brokers out there. They look pretty legit. I mean, if they've been around since 2001, the way to check is if you go to their website. The simplest check you can do is if you go to Wayback When machine, yeah, and just grab their website, stick it in the Wayback When machine, and have a look at history for that website. It goes back to 2001. They were established in 2001. And you can look at their website and just have a look at, what do they look like back then at 7:54 on the 18th of March, etc., etc. The websites don't all load perfectly, but yeah, they've been around since then. It was the same company. What you want to look for is, was it still called Active Trades? Was it still that company? Yeah. God, this is going back in time, isn't it? Look. God, look at what websites used to look like. Direct access trading platforms. In 2006. Wow. God, look, the Nasdaq was at 4,059. What did they look like in 2002? Oh, they were using Flash. Founded by institutional brokers, Active Trades offers a private investor, fast and powerful direct access platform. Is that MT4? No, that's not MT4, is it? That's before. There you go. So that's what you do. If you're thinking about broker change, just go and check them out on the Wayback When machine. You get lost in the Wayback When machine, then you go, oh, I wonder what they look like. And then you end up spending an entire morning just reminiscing. Go and look at Google from 2001. It's really interesting. No, not 2001, 2008. No. I can't remember. Whenever it was. 1998, wasn't it? No, it's not 20 years. I can't remember. But go and look at Google years and years ago. It's very amusing. Where broker prices where I got in. Yeah, cool. Okay. So I'm just holding this at the minute, this DAX short. I got a sell stop in, so I'm stopped out of one. I'm 0.3 up at the moment. We're not getting an awful lot of movement now off the back of that spike. I'm just a little bit worried that, we got rejected immediately up there. Obviously, all these positions up there were sellers. So it is bearish. Otherwise, we would have got a breakout there. So the sellers are stepping in. I'm just a little bit worried about another leg up on this, but we'll see. Just looking at what the other pairs are doing at the minute. All the Aussies are in accumulations at the moment. Euro US dollars coming down very hard, actually. So we've got a strong US dollar this morning. Euro US dollars coming down pretty hard. Not an awful lot on the pounds. Yen's just broken lows on the Aussie. So officially market structure is bearish. Still got to get through the accumulation from yesterday, but we are bearish so far on the yens, which is really, really, really good news. Double bottom there, unfortunately, on the CAD yen. Swiss yen's not made it yet. Euro yen not yet. Pound yen has. New Zealand has. US obviously is bullish at the minute, so it's not going to be pushing as hard as the rest. So looking good, looking good. I saw the death in that candle. Yeah. My death was in there as well. My death was about... Where was my death? About here. But hey, it's nothing you do. News. And just imagine how many news traders died there. So all the news traders that straddled that, yeah? All the news traders that straddled that went long, stopped out, short, stopped out. Double death. After this, going to have lunch and see if I still have an open account. Drama. God. That's not good, Franco. Going to be a long night. Political meetings. News is the worst. Right. So yeah, short on the DAX. Target on the DAX is, overall target is that 14,000 level. So at the moment, I'm targeting just the lows. I'm not going to get greedy with the positions that I've got on. That's enough to get me out with a couple of %. And then if we just smash this, I'll be looking for pullbacks, because if we smash this low, if we break this low, next stop is that gap. So if we break that low, I'll be looking for pullbacks and then build a position short this afternoon. But we'll see. We've got to get down there first. So we need to get these lows. We need to get this low taken out first, break out of this triangle, and then pull back and get down to here. So that's the play for this afternoon, for this morning. And then this afternoon, hopefully, look for a play short, but we'll see. So I'm in second position short on the DAX. Then we'll see what the rest are doing. All the other indices are kind of stalling at the minute, so there's nothing much moving. What's the best way to trade new FX? What's the best way to trade new FX, etc.? What does that mean? Oh, news? There isn't a good way to trade it. News is a manipulation. News is for the market makers to assimilate us. I'm not going to stop calling it an accumulation. I'm going to call it an assimilation. So news trading, you were here yesterday, weren't you, when I was talking about how the markets execute orders. Yeah, so I got 250,000 contracts to place. I'm going to break that up into 50 lots of, let's do 100 lots of, so I can make it easy maths. 25 1,000. No, that's 10. 10 lots. They basically break this up into small pieces and execute it. Yeah. To be able to dump loads into the market, they need liquidity. Yeah. News, when there's news coming out, people try to trade the news. Retail, 99% of the liquidity provided at news events is retail. It's us trying to straddle trade news. There's courses out there that teach you how to do it. It doesn't work long term. It will work. You'll get a few good ones and you'll be like, woohoo, this is the way. Non-farm payroll. I'm just trading non-farm payroll. And you'll get 2 or 3 non-farms and then you'll be like, wow, this is amazing. And then the next 10 non-farm payrolls will destroy you and blow your account. Because the news basically is used to manipulate the orders. So if you've been accumulating ahead of news, you've got a book built. Yeah. Everybody's got orders here. So what you can do is you can grab those orders, take it down to there, grab those orders, make money, exit, push it back up to there, grab all these people's stops, and then come back and carry on with your accumulation. There is no good way to trade it. You can try. Straddle trading is more gambling, and you will get really good ones that work like that. But look how fast that was, yeah? Look at the DAX on the 1 minute chart. Yeah, that's where we closed the previous candle. Within 1 minute, they'd gone up there, grabbed all the liquidity, come back down. Yeah, everybody today that entered short, including me, is gone. And now they're just going to go like that. Everybody that's entered long today. So this is not how, obviously, they're not doing this news-wise as a manipulation. That was just a bunch of orders being dumped. But this is what the market does. It dumps orders. That's algorithmic, yeah. An algorithm went like that and came back with a $1.5 million profit. Multiple algorithms. There's no real good way to trade it, the news. The best way to trade the news is like anything else, yeah? Have a directional bias, right? So that news there, for example, if you're short bias, a couple of minutes ahead of the news, put a sell stop in. If the news goes in your favour, excellent. If it doesn't go in your favour, never mind. But don't try and straddle it, because 9 times out of 10 you'll just get double done. I do it sometimes, just because I think the news is going to be a slower news release, but it's very hard. What I tend to do with things like non-farm payroll when I'm trading the news is I will see what the initial reaction is, and you tend to get a little bit of a pullback before a push. That's where I get in the direction of the news, and then I will get out at some point with X%, and then I will fade that news back down, because 9 times out of 10 that's what happens in news if it's a big one. Franco, I said above because I used to sweat every pip. Now I've grown. Yeah. Don't sweat every pip. One of my old mentors, I keep going on about my old mentors, but they taught me everything I know. So it's difficult not to reference other people that have taught you what you know. But one of the things he said to me, again, these are just light bulb moments for me now looking back, are like, yeah, that was obvious, but didn't realise it at the time. But basically, he said to me, you take a trade and then that trade is gone. That's it. Regardless of what happens in that trade, it's got absolutely no impact on the next trade that you're going to take. Yeah. So if you're doing aggressive drawdown control, for example, on this pair, and you try an aggressive position here, and it gets stopped out, yeah, that trade's happened. It's gone. Draw a line in the sand, and don't look at this at all. Price action now. What am I doing now? Take a long there, put a stop under there. Yeah, that's a new trade. So every time you take a trade like that trade I just got stopped out on, forgot it, don't care, it's gone, not interested. What is the market structure doing now? What am I looking to do now? Forget that, it's happened. It should have no bearing whatsoever on your thought process as to the next position. I got stopped out on a short. I'm still pretty sure I'm right on short. Just got stopped out on it. So you forget it. And it's one of the most difficult things to do, but it's the thing that stops you over trading. It's the thing that stops you revenge trading. Yesterday, I was down 1.7%, was it, at some point? I have my pads downstairs. And I pulled it all back. I don't care if I've had 4 trades in a row that have been wrong. I've had 4 trades in a row that have been wrong. This one is new. This one is the one I take short and does that. And it basically pays for those and adds an extra 2 or 3 X's onto my profit rather than my loss. Yeah, you don't know what's going to happen. This now could tank 2.5%. As fast as it did that, it can do that. We don't know, do we, what's going to happen? So you have to forget what's just happened and concentrate on what's happening now. The trade that I'm in right now is that one and that one. There's my average. This is what I'm managing now. I've forgotten it already. And I think that's what Franco's talking about. If you worry about every pip you've lost, every percentage you've lost, every dollar you've lost, you'll never be able to concentrate on what you're doing now, which is watching what this trade is doing. And if this trade comes down to here, bounces like that, and then smashes through that low, do you think I'm going to worry about that 0.5% I just lost? I'm king of a monkeys, because that's going to be sitting at 1.8. And I'll be watching this like a hawk and managing this. Concentrate on the now, not what's happened. Don't put the picture of my broker being Borg. No, your broker is not, unsettling. Resistance is futile. Totally. Is anybody watching the new series of Star Trek Picard? It's really good. I've obviously given away what goes on in it. I haven't given away what goes on in it, but it's pretty obvious. Yeah, Picard and the Borg. Never been friends. So yeah, it's good. Time travel and the Borg, what more could you want? Come on, Star Trek. Right. I'm going to leave it there for this morning. I'm just managing this position. I'm going to keep an eye on this low. We've not made any progress today from the opening range. So that's our opening range high and low. God, I can hardly see it. Sorry, no, it's not. That's our opening range high and low. So from where the session opened, basically, we've kind of pushed down, pulled back, taken out the high, and we are now ever so slightly pushing down. So the progress that we've actually made is kind of that, which isn't a massive amount when you obviously look at where we could be going. But so I'm just going to manage this one short. I've got nice wide stops on today, so I'm just giving it a bit of breathing room because we're not trending, we're just rotating at the minute. So I'm just looking for a breakout and move in one direction or the other. But bearish stance on it at the moment based on previous days. And just looking basically for that move today down to there. It's well within reach. It's ADR basically, so I'm looking for an ADR drop ideally today, or at least some progress to it, getting yesterday's low broken. So yesterday's low is what you want to be watching, because that is also previous day's low. So that's a double bottom break. If we get a bounce off of that double bottom, if we get down there, obviously, that's where we need to start thinking twice, which is why my TPs, as you can see, initially are sitting there. I'm not going to push for this in one go. I'm going to take the profit there because I'm expecting some reaction there. And that will either be a spike through, pullback, drop, or it will be a bounce potentially and then drop. So that's where I'm initially going to get out. But I'm going to see how we get on and see what the price action looks like. And obviously adjust as necessary. So, but that's all I'm going to play today. That DAX short. I don't really trade the US indices in the morning because the DAX is the one that tends to get the most of the movement. Got a bounce again on pound odd. So we are definitely in an accumulation, 3-session accumulation here. Tense moments. Have I watched Game of Thrones? Twice. I have done a complete run through of Game of Thrones twice. Yes. Loved it. So basically what we did was we watched Game of Thrones seasons 1 to 9. It's 10, isn't it, in Game of Thrones? Don't know. But we watched 1 to 9, and because there was such a big break between the previous season and the last season, we went back and we started on episode 1, and we timed it so that when we got to the end of season 9 or whatever that season was before the last one, season 10 just started. So actually I've watched all of it twice, apart from the last season. I've only watched that once. But yeah, we did a complete binge. And I did the same with The Walking Dead. When this season of The Walking Dead started, the last season of The Walking Dead, we went back to the beginning of The Walking Dead and we watched the whole Walking Dead again to start The Walking Dead final season, which unfortunately split up into multiple parts over a year, and it's really annoying and crap. But yeah, new Game of Thrones TV show coming out as well, isn't there? The Dragons, which is going to be awesome. New, also, anybody that's in talking TV, new Lord of the Rings TV show starting on Amazon soon, which looks absolutely awesome. Which is The Forging of the Rings. Anything to do with sci-fi and fantasy, all over it. Star Trek Discovery as well. Very, very, very good if you like Star Trek. Takes a while to get into it, but it gets really good. Anyway, stop talking about TV. So we're making some nice progress on the DAX. Again, going to be watching these lows, as I said. They released a new series called House of the Dragons, yeah. That's the one I was talking about. I was trying to think of it. That's why I said dragons. I couldn't remember what it's called. Something to do with dragons, because it's to do with the Targaryens, isn't it? So they're back. It's what they do, isn't it? Backstory of the Targaryens, and then doing the backstory of the Ring in the Game of Thrones, in the Lord of the Rings one. This is, we've had the backstory of Star Trek in Enterprise. They always do these backstories, don't they? Always quite good. Anyway, right. I'll leave it there for this morning. I'll be back at 1 o'clock for the New York session. There's nothing to look at today news-wise. We haven't got to worry about any news at all, which is nice. We've got UOM this afternoon, which isn't really going to do a lot. So it's just going to be price action today. So hopefully we get some continuation drops on these Aussies. We can get some progress on the pound odd and pound New Zealand. And long may the yen collapse today. So we are finding a little bit of support, but that's not unusual. But there's going to be buyers here, obviously, because there's going to be stop orders under there. People are going to see the stop orders executed in the spike, and they're going to start buying. But the sellers are very much in control so far today. So fingers crossed on those. Good timing, beef and bean foot-long burrito delivery. Jesus. Cholesterol overload. Right. I'll see you guys at 1 o'clock. We'll trade the New York session. Good luck this morning. Fingers crossed we get the DAX, the Dow collapsing, the DAX collapsing this morning. And I can get some decent profit in the bank. And I will see you this afternoon. Have a good morning.